3 ways to earn, no, excuse me, my goodness. This is my first live. This is going to be a lot of fun. But there are 3 ways to go on vacation. There's one way where you help other people make a lot of money. There's a second way where you spend all of your money. And then there's a third way where you can grow your money and take the vacation at the same time. Hello and welcome to the Durham Talents channel. My name is Jesse Durham, where I teach people how to live and leave a lasting legacy with this infinite banking concept. So I read this book and saw a presentation about this general idea back in 2015. And one thing that's been true for me since 2015, like it's been for you, is that I've gone on vacations. And here's the thing. You've gone on vacations before. You probably just got back from a vacation. I mean, it's summertime. That's why I'm having this workshop on how to grow wealth while taking vacations, because you probably have just gotten back from a vacation, or you are on vacation right now, like I have clients that are on vacation right now, or you're going to go on vacation. So I'm going to try and share some things on the screen. If this is your first introduction to infinite banking, I would encourage you to get in this book by Mr. R. Nelson Nash. I have the 5th edition right here, but you can get a PDF version. You can get an audio version from his website. Get into that source material for yourself, but I have on my Durham Talents channel, or you can just go right to durhamtalents.com, an introductory presentation. I saw a presentation back in 2015 that changed the way that me and my family go on vacations and grow wealth so that we're living and leaving a lasting legacy at the same time. So I would encourage you to watch that one main presentation video if this is your first exposure to this whole idea of going on vacation and keeping the money at the same time, or the infinite banking concept. So let's get into some things. This isn't going to be magic. You're not, though, here's some things you're not going to have to do. You're not going to have to, if you decide to implement this concept, you're not going to have to work any harder. You're not going to have to lose control, take on any additional risk, or change your cash flows. See, again, you've got 3 options on how to finance vacations, how to go on vacation. And I'd like to break that down. I'm going to give you some visuals as well. So we're just going to look at this logically. We're going to evaluate which one of these methods is the superior method. I think that I've arrived at what it is for me, and you should for you. And perhaps I can get some links in the comments section for you, again, to get you right to that presentation. But let's jump in some things. Now, I will go ahead and say right out of the gate, this is one of my favorite quotes by Will Rogers. Hopefully you're seeing that right. I think you are. That the problem, right, is not necessarily what we don't know. Like, there are lots of things that I don't know, but really it's the things that we think that we know that just ain't so. Like, if I just say, and that's why I said it's not magical, if I just say you could go on vacation and increase wealth at the same time, that just doesn't seem at face value to necessarily be true. But hang around, let's just look at some things with some reason, with some logic. Now, if we could preface by saying that nobody's ever gone on vacation and then regretted having spent time with family on vacation, creating peak life experiences, creating cherished memories. Nobody regrets that part. But something that could be regretted is the financial repercussions of certain ways of financing or paying for that vacation. So the spoiler alert is that, there is a way for you to go on vacation and increase wealth at the same time. Me and my family did vacations the normal way for years and years. We actually have our 3rd child is born from the time that these pictures were taken, and a 4th one is on the way. But because of this book from Nelson, we learned a greater way of doing things. Now, here's a picture and another quote from Nelson, which I love. Your need for finance. And that's what we're getting ready to talk about. How to go about financing vacations, because you again have those 3 options. And it's much greater than your need of protection even, which is really important to a lot of people, to be protected in whatever you do with your family, with your finances. Protection is important, right? But really, our need of finance is even greater. So we could talk about both. Again, like I said, for us, we saw infinite banking in 2015. and we had a lot going on as a growing family. But what permeated that timeline that I'm putting on the screen for you was vacations. All right, so let's just dive in on these three methods. The first is using the bank, is using credit cards, is using a HELOC. It's using credit. So I'm going to give you 3 C's here in a second. The first is credit. Now notice this. Notice this 0 line. So this flat line at the top is showing a value of 0. Okay. So what does it look like? If we want to go on vacation this summer and we're going to use a credit card, or we're going to use our HELOC or whatever method of credit that we're going to use, we go below 0 and then we got to dig our way out of that after that vacation. Okay. So let's break that down a little bit further. What that means is that you are asking someone for permission to use their money. It's very likely that you're going to be providing collateral. Terms and conditions are, of course, going to apply. You will be paying interest on that money that you are borrowing. And when you do pay it off, you're going to be back at 0. Like that's just what that cycle looks like, is that every time you take a vacation, and if you're using credit, you're going back below 0 if you're qualified, fronting the collateral, paying that interest, and then hopefully eventually getting out of that. And that's creating a great living for banks. That's creating a great income where you going on vacation is making income for someone else. And I've done it. I've done it that way. We did it that way for years. Also, the second method is going to be the cash. And we recapped those characteristics of using credit. The cash method, the second method with the letter C, I hope that you like that. Let me know in the comments section if that's helpful for you to remember these options, is cash. You forego spending your money. So again, you see the line right here of 0 is still there, but you're building up. You're building up the capital. You're building up the funds to be able to take this anticipated vacation. So just notice right out of the gate, of course, that this is a superior method to credit. You're not asking anybody permission. You are liquid. You are not paying anybody interest. So it's a superior way of financing. And that's where Dave Ramsey and everybody else is right when it comes to paying other people interest. A few key things, though, that does show the limits of just simply paying cash for your vacation. Let's talk about some of those limits. So if you follow through on this cash is king methodology, you have to forego, which is a good thing. I'm not saying it's not. It's a great thing to discipline yourself, have a habit of delaying gratification so that you're not paying other people interest. Build up the capital for what you want, but then notice a few things that happen. When you take that vacation, you liquidate your funds, and you're still, watch this, back at that 0 line. You go back to 0. Now, I can't help but think of a quote from Warren Buffett where he says, rule number 1 is don't lose money. And then he says, rule number 2 is, well, if you need to reference, go back to rule number 1, right? So it's just, the bottom line is don't lose money. So again, here's what I'm saying is that cash is superior to credit. You're not paying interest, you're not asking people's permission, etc. But at the end of the day, you do go back down to 0 and you have to start saving again. Notice I didn't say investing. There's a good chance for me to say that. Saving is what I said. I'm not going to be talking about investing. I'm not giving investing advice. I'm talking about financing, how you finance things in life to include vacations. You liquidate the principal that you had saved up. That's one big limit on the cash method. You can only pay for that vacation one time. Those dollars that you paid cash, paid cash for the vacation, have forever left your hands. They're no longer contributing any kind of value to what you may be trying to create for yourself. Another limit is that when you have liquidated those dollars that you saved, that you set aside to go on that vacation. You've also then limited the money that your money could have been earning. Okay, do you follow me on that? See, everything is financed. Going back to Nelson's quote there. Everything is financed. Either you're paying somebody interest, like we saw with credit, or you're foregoing, you're losing the opportunity to earn interest on your money when you're just paying cash for things. So you liquidate those funds, take the vacation, that money's gone, the principal itself, and any money that could have earned you. And then, of course, you're just going to keep repeating this cycle, this process as well. Good time for me to watch what's going on in the comment section. And if you have questions along the way, please feel free. So as much as I'm trying to convey in a workshop type fashion, and I will be returning with other themes because I've had a poll on the channel. So all that to say, if you go to Durham Talents on YouTube, you'll see that I've created a poll of topics that I can cover in this workshop type fashion. So stay tuned there. I typically release content on Mondays and Fridays. Here I am recording this on a Monday, so I've just put this into the cycle. This is going to be a great opportunity to have question and answer, back and forth dialogue, me address your questions while still facilitating a real tactical, a real practical financial issue in your life to show you how to live and leave a lasting legacy. So all that to say, feel free to put questions down in the comment section. Even if you're seeing this on the replay and not on the live, I will address those. Also, feel free to go to that poll on the channel, cast a vote, or make a suggestion of what you would like to see covered. Let's keep going. So here are the benefits, but then also the limitations of this cash method. You're not asking permission from anybody. You don't have to front collateral. It's got lots of advantages, but huge limits as well. Enter the third C. All right, we've talked about credit. We've talked about cash. Here's compounding. How to capitalize for yourself. Okay, it takes money to go on vacations. I'm not saying that the money's not going to be spent if you go on a vacation. You're going to spend money to go on a vacation. Remember, I began by saying this is not magic, but this is a way for you to be able to compound your capital, for you to capitalize somewhere, for that money to be able to earn you money, for you to be able to compound and have that compounding uninterrupted for your, watch this, whole life. Pun's going to be intended there in a moment. You can compound for your whole life and still have access to capital from this private entity, this private, what I'm just going to go ahead and call as your private family banking system. See, you always go somewhere for the money to take your family on vacation. I think folks should be capitalizing, should be saving money in something that they own and control, a private family banking system. So have your money saved and growing and compounding in a place where you still have access. Remember, I said it's not locked up. You're not losing control. You can still have access to capital at the same time of enjoying uninterrupted compound growth. So visually, what does that look like? Well, we're changing the paradigm here. So here is our zero level, okay, of $0. And remember, with credit, you went below, with cash, you went above, but at the end of the day, you ended up back at that zero line. With compounding, you're going to have this constant upward growth trend of capital over your, and again, whole life. So again, big pregnant pause right here. If you knew that you could have uninterrupted compound growth on your money while still having access to a compounding pool of capital for your use. You're not asking permission. You're not foregoing the cost of capital, the EVA, the money that you could have been earning on your money. You're not filling out an egregious amount of paperwork. Okay? If all those disadvantages or limitations of the credit method and the cash method were gone and you only got to enjoy the benefits of ownership and control and access in a guaranteed fashion, remember I've also said no additional risk, would you like to take vacations that way? How are we doing so far? So there are 3 ways of taking vacations. This is the infinite banking way. Now, Nelson in the book talks about how to use a private banking system for all of life's purposes. It doesn't matter whether it's financing cars. My family and I actually recently financed a car. I have a video on my channel right now where you can go and watch and see about how we financed our most recent family vehicle. Go check that out. I would encourage you to. But this infinite banking concept could be used for your cars, your vacations, college, expenses for your business, of course, expenses within your household. I mean, it doesn't matter whether it's appliances or property taxes or whatever the case may be. Remember, everything is financed. And whether it's vacations or anything else, what are our options? Credit, cash, and knowing what you know now, compounding through infinite banking. So this is a great chance for me to also ask, because I know that folks are going to be seeing this as current clients. Please give me your feedback. You're already in the game. You've already implemented this concept. Let me know what's most helpful to you. But this is also catering to folks that have not yet implemented the concept. There are plenty of folks that are vetting the concept, that are learning about it. And again, I'm going to always point you to the original source material itself. I would encourage you to get this Becoming Your Own Banker book. You can get it at infinitebanking.org. That's directly from the Nelson Nash Institute, Mr. Nelson's Institute, his book, his website. I just had the benefit of reading it back in 2015 and implementing the concept. I do personally help clients implement this concept. So again, that's why I'm talking to you clients out there. If you've not yet implemented your private family banking system for vacations, perhaps it's time. So consider the fact. And we can have a consultation call, of course, to that end if you're ready to level up what it is that you're doing. Also, if you're vetting the concept and you're learning enough to know that you're interested enough with questions, of course, you can put those in the comment section here. If you'd like to have a private consultation call, you can connect with me at durhamtalents.com. Jump right into my calendar link for the first call option. And it's free. It's a consultation call where we could address what it could look like for you to implement the concept into your household, into your business, whatever it is that you have going on. Vacations, of course, too. So again, just to be a bit of an open book for you and let you see that I practice what I preach. Again, we've implemented this concept for we're in our 10th year now of implementation. Vacations being a big part, a permeating occurrence for us because we like going places. You do too. But we've done lots of other things along the way. We used infinite banking to pay off debts. See, when I saw this concept back in 2015, we had student loans. We had credit cards. We had a different family car at that time with a bank note on it. So we use this compounding method, this infinite banking concept, to be able to pay off our student loans, pay off the credit cards, pay off that family car. And I have that shown some in my presentation video. So again, if you've not seen my main presentation video, check that out. But I also have a workshop style, what I call life lesson on leveraging liabilities. So that's how to pay off debts and grow wealth at the same time. So it's not a simple debt snowball where you're just paying cash to get out of debt, because we wanted to get out of debt. But knowing this concept, we wanted to grow our family wealth. We wanted to create a family banking system at the same time. So that's what we did, was we created a family banking system that we used to pay off those student loans and credit cards and the family car. And I've got a life lesson where I document that and where I give you actionable steps on how to implement a similar trajectory for yourself if you are dealing with debt. Because you may have seen this particular workshop today and been in love with vacations, of course, and the ability to grow wealth at the same time. Amazing. But really, it might not be the best first step for you. You might be like we were and have some things that you want to clean up financially. Well, again, I would encourage you to check out my introductory presentation or to watch that life lesson on leveraging your liabilities. If you have bad debts in your life that you want to pay off, then a superior way of financing that bad debt is infinite banking. So that's my encouragement to you there. If you're seeing this and loving this for vacations, but know that that won't necessarily be the first step for you, consider checking out that information and seeing where that's helpful to you. So we've done a lot of things with this concept over the past several years personally. Now, over the past several years professionally, I've been helping folks, and I can play a couple of things in the background right here while I speak with you. I've been helping folks all across the country implement this concept for themselves. And again, the idea here is that you can become your own banker, to include for family vacations. Oh, that music sounds good. So again, I'm trying to give some time here for anybody that has questions. Put those down in the comment section. I'm keeping an eye on that. We're coming close to the top of my time. I've got a client, a conversation right after this, but I wanted to fit this workshop in today because you've asked. You've asked for these workshops. There will be more. I knew that I wanted to get this vacation one out to you, but again, it's not just for vacations. This could be for anything that you are already doing in your life. You don't have to work any harder. You don't have to lose control. You don't have to take on any additional risk or change your cash flow. You could just add one step to what it is that you're already doing. All right, start using a private family bank. And I know that I've not spoken much about, but you've seen some pictures and I've said some key words about what this is. And no secret, you're gonna hear that in my presentation video. You're gonna read about it in this book. You're gonna have seen pictures in the slideshow that I have behind me. The asset that's ideal for creating a family banking system is and listen closely please, a properly structured whole life insurance policy from a mutual company that pays dividends. Now that's a long title. That's a list of several words, and you might have bogged down on whole life insurance, but that's what it is. So if you are open-minded enough, I'm going to encourage you back to Will Rogers' quote, where remember, it's not so much what we don't know. I heard a guy say it one time, and the visual's always stuck with me. He says, what I know, you could fit into a thimble. And what I don't know, you could fit into a dump truck. Okay, there's lots I don't know. There's lots you don't know. There's lots we don't know. But what can be dangerous is thinking we know something, but it's just not so. What I've found to be true from reading this book and from implementing this concept myself is that a properly structured, specially designed whole life policy from a mutual company that pays dividends is the ideal financial asset. It's the ideal place to be able to store, grow, compound, okay, capital with so many advantages. And I could go into those advantages. Perhaps we could spend a few minutes talking about why it's the superior place. Let me give it a few more. Most people think that it's just for the death benefit. But this visual I think will be really helpful. You can let me know in the comment section. Folks are used to these life insurance policies, of course, having a death benefit, what I call a leaving benefit here. But there are lots of living benefits when it's properly structured and designed and funded. I think that whole life insurance meets all of what I have here as a list of characteristics of what I would want in an ideal asset. And you tell me if you like the sound of these. Having control, having this be an easy to manage asset, no hidden fees or penalties. It's a reputable asset. It's a private asset. You can have creditor protection. You can have tax advantages, access to your capital in a tax-free fashion for your whole life, tax-free access to capital that's compounding uninterrupted for your whole life. So there are several right here that I mentioned. And because of those characteristics, that's how you can have these living benefits where you can use a policy again. And I give lots of examples here. It doesn't matter if it's for your vacations, doesn't matter if it's for your business, doesn't matter if it's for furthered education. Now, I cover these topics again, particularly in my life lessons series on my YouTube channel. So I would ask if this has been a valuable conversation to you on how you can take a vacation and grow your capital at the same time, then consider subscribing to the channel. But on the channel, the Life Lessons series covers these various topics, these various themes that I'm going to be facilitating in these workshops live as well. So I appreciate everybody that's tuning in here. But the cycle looks like this. Instead of using commercial banks, you can put your capital in a policy where you're the owner. You're the one that controls this private asset with all those attributes that we were just reading about. And you have access to capital for whatever intended purpose that you want. A vacation has been what we've been speaking of today. You do. So you're using this closed system of a private family bank instead of a commercial bank where you're already making deposits, aren't you? Where you're already making your withdrawals or your loans, you're getting access to money there. But who owns the bank? Food for thought. Who owns the bank? And isn't that a nice building in the nicest part of town with the best kept grounds? Well, that business is owned and controlled by someone. So we're putting our money in somebody else's business where they're making a great living off of our money, the interest that we are paying them, or the use that they have of our capital that we're saving there. I'm saying you could be doing all of those things for yourself. You could have the ownership, you could have the control, you could have the growth and the profitability by having a private family banking system of these policies. To date, I started with my first to pay off debts, like I told you. And then, much like commercial banks open up multiple branches in my town, your town, my wife and I, have created a system of several policies over the past going on 10 into the video, but I'm getting my alarm from my consultation call with a client. So I hope that this has been helpful for me to show you, clients, another way of implementing infinite banking in your life. It's summertime. Folks are going on vacation. And for those of you that are still learning about infinite banking, my encouragement would be just that. Keep learning. And when you know enough to know that you want to do this, well then, like James Nethery says, it's all conversation until somebody writes a check. Meaning, it's fun to watch other kids ride bikes when you're a kid and you've never ridden one before. It's a whole different story when you get on the bike and you start riding around for yourself. So I hope that this has been helpful. Again, my encouragement to you is check out the channel. Find the resource that's best going to help you, whether it's my presentation video to see an introductory look at this concept, or it's my calendar link to book a free private consultation call with me. You can find access to all these resources that I've mentioned from the website durhamtalents.com, or go directly to our YouTube channel. My hope is that you do live and leave a lasting legacy. Have a great day. Take care.